Good morning.
The US dollar is little changed to start the trading day on July 27th, 2025. Fed's Bowman. Fed independence is very important with respect to monetary policy. Mexico retail sales, MOM, up to 1.8% in May from previous 1%.
Mexico retail sales, year over year, increased to 2.7% in May from previous is 2%. Crypto today, Bitcoin consolidates, Ethereum and XRP trim gains as Elon Musk's SpaceX moves $150 million BEC.
Pi Network price forecast. PI hits a crucial resistance as range breakout gains momentum.
Pound sterling trades stable, while focus shifts to flash UK-US PMI data.
Euros US dollar holds near highs as trade uncertainty weighs on the US dollar.
Gold price forecast. Gold US dollar strives to break above $3,400 amid US-EU trade tensions. US percent. August 1st is a pretty hard deadline.
Saudi Arabia exported more crude oil and oil products in May, Commerzbank. China imports significantly more Iranian oil from Malaysia, Commerzbank.
Gold stalls despite elevated trade tensions and rising concerns over Fed independence.
Mexico retail sales, year over year, increased to 2.7% in May from previous 2%. 4 minutes. 4 minutes.
Oil prices dip as EU-US trade war jitters grow.
Yeah, I guess we got to start pretty soon. Trying to find my camera. See if I can adjust this a little better. I think the resolution's off. Oh! A little better. Yeah, that's better, right? Hang on. There we go. That's way better. Hey, good morning. Yeah, that's pretty good, right? All righty. Guess I have to deal with the music. All right, let's get going. Hey, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! So, hello. How are ya? How's your mum? Okay, so now the changes I made to the camera are also good. So anyways, there we go. Now I got to adjust this. What? So maybe it's not so good. I don't know. I'm just trying to get through life alive. You know what I'm talking about? Anywho, hey, so we got Powell doing a speech right now. And so is it going to be a market mover? I don't know, probably. But maybe. Probably. What else going on in the world? Well, not a lot of news on the calendar this summer. It is earnings season. So, so this time of day as news comes out, maybe it can be a little choppy. Let's get an update, see what's going on in the world. Saudi Arabia exported more crude oil and oil products in May, Commerzbank.
Oil prices dip as EU-US trade war jitters grow.
China imports significantly more Iranian oil from Malaysia, Commerzbank.
Gold stalls despite elevated trade tensions and rising concerns over Fed independence. The US dollar is little changed to start the trading day on July 27th, 2025. Fed's Bowman. Fed independence is very important with respect to monetary policy. Mexico retail sales, MOM, up to 1.8% in May from previous 1%.
Mexico retail sales, year over year, increased to 2.7% in May from previous is 2%. Crypto today, Bitcoin consolidates Ethereum and XRP trim gains as Elon Musk's SpaceX moves $150 million BEC.
Pi network price forecast. PI hits a crucial resistance as range breakout gains momentum.
Yes, all those headlines just came out just in the last few minutes. RBA meeting minutes came out this morning. Powell's speaking now. Tomorrow, existing home sales in the United States, month-over-month and year-over-year. And then PMI season starts, and we start getting PMI across the board, although it doesn't really matter. What the market is focused on is the ECB interest rate decision that is coming up. They're not expected to move, and that's what is likely to happen based on past performance. Scalping radar shows that we're kind of consolidating a lot of the markets where the greatest opportunities on the planet are just back to support or back to resistance. Although we do see some Aussie, Kiwi, and even potentially some pound weakness, right? So here's some pound yen potentially breaking out, euro yen potentially breaking out. So we got that yen strength coming in, potentially Kiwi, that kind of stuff. So the markets are moving a little bit, and luckily we have good radars to show you what's happening right here, right now, as far as not theoretical breaches, but actual breaches of support and resistance, or, right, respect of support and resistance. If you want to get it more like 75% probability, you'll see it's right. It's these. Hey, did you answer the poll? What's your favorite zoo animal? Orangutan? You like emus? Oh, that's not the question. The question is, what are you trading today? Risk on or risk off? I'll let you go ahead and answer that. So earlier today, inside of TRADARS, we already did our live stream. Did you know we went through every one of these charts one by one by one by one by one, looking for day trades? I know, right? That's good. Yeah, that is good. let's do some reading here, huh? Let's read our articles. What's going on? Let's only do Forex. Let's go silver up, Aussie dollar down, pound yen up, USD yen down, euro dollar. Yeah, so everything's flattened out in the last few days. Okay. This is media coverage. This is market sentiment. It's how people feel. Huh? It's how people feel. Okay. Do we have Microsoft? I bet you people feel bad about Microsoft today. Yeah. So anywho, let's do quick fundamentals and then we'll go. So this is part of our macro. 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 You like the macro? So what is macroeconomics? Well, it's actually the study of the very, very big in economics. I'm not talking about the universe or the galaxy, but what we're talking about are things like interest rates at central banks, trade amongst countries, levels of inflation that would adjust the central banking policy, all that. And so we're looking at the entire country, and then what we want to do is comparative analysis between countries, because when you're trading euro dollar, you're trading Europe versus the United States. So anyway, so we got to know where we stand in the global economy, what's going on, where are the capital flows. Look at that, I have to adjust this. Did it myself. You did this to yourself, Wayne. All right. See how they run. All right. Let me boost it a little bit. Can I boost it one more? Sort of. It's okay, I suppose. Nah, that's too much. Okay. So, anyways, yields have come up. 4 1/3 is okay. We were at 4.5. So over the last week, it's okay. Right. And what we want to see is, if there's a run into a particular asset, huh? And so right now, that's quite modest. Oil, 66.5, but down 1%. And, we already looked at targets earlier today for oil potentially heading, you know, how should I say? How about support? Key level of support. Yeah. S&P 500, all-time high. Dollar flat. Bitcoin, look at that. Oscar Mike. An hour ago, it was 118 something. Now we're above 119. Ooh la la. Smells like 125. I don't know. I looked at Bitcoin earlier, and the technicals were not amazing. But maybe things are warming up. So why don't we do things like, why don't we cover Bitcoin and gold and the 10-year T note? We can look at dollar versus euro. Why don't we do that? Does that sound all right to you guys? Like, Wayne, dude, that's what we do every day. Oh, okay. Well, then let's go. Well, before we go there, how do we make the decisions on these things? Like, I want you to be able to just make your own decision. I'll show you how easy it is. Okay. You look at GDP, inflation, jobs, interest rates, PMI, both services and manufacturing, institutional investing, retail investing, and then do comparative analysis of all that data between Europe and the United States. But you should also look at the technical charts and the seasonal charts, the short term and the long run, what is and what should be. And with all that being said, you're able to go boom and make a decision. Oh, so what should we buy? Oh, you struggle with that? We don't at TRADARS. Look at that. We're very bullish there. What should we sell? Have you considered this one? Have you considered this one? Have you considered this one? Okay. And look, it's all based on logic and intelligence. So if you are struggling, okay, if you are struggling to make decisions, your struggle is over, my friend. You're just not informed. We have all the information here, and it's well thought out and organized and easy to get to. So the major benefit of TRADARS, of course, is it just saves you boatloads of time, but also gives you hyper focus. And hyper focus on the one thing that matters now, not all the randomness that you probably trade. So once you've made decisions, and like I said, here are all the things I'm bullish on, here's all the things I'm bearish on. That's such an easy thing fundamentally, right? Yeah. So we have that for everything, but because this is a free YouTube stream, you only get some things. Ha ha ha. Yeah. So when we look at euro dollar, you have to think about the fact that we're looking at GDP and jobs and inflation and PMI. We're looking at seasonality. We're looking at the technical charts to make a decision of, do we want to buy or sell? Super simple. So once you know this, then you have your bias. Do you want to buy euro dollar? Well, you might actually be neutral. So if you keep trading it and not getting the results that you want, well, maybe it's because you're trading something neutral and not something extreme, something extremely bullish or extremely bearish. Okay. Okay. Well, sell, it's because I'm trying to teach you how to make decisions. This is what you're supposed to be doing, Sal. This is how you're supposed to be trading. That's what I'm trying to show you. You need to line up your fundamentals with your technical if you want to have consistent results. That's why. But I'm also very open to questions, right? Right on Universal Code. Yeah, since 2017. Yeah. So I thought this format, Sal, I mean, I guess maybe I hit pretty hard. Like, for example, I went through dozens of pairs already this morning. So I guess maybe, so you're saying, well, I'm only doing one and I'm holding out for all the people that are paying money. Yeah, well, I've already done that, right? So yeah, I think it makes sense. So like this morning, when it came to Forex, I mean, I think I did all Kiwi pairs, all Aussie pairs, all pound pairs. I think I did all cryptocurrencies. I think I just did the 10-year T-note and Microsoft. I did all commodities, international oil, U.S. oil, gold, and silver. I think I did all stock indices, or was that yesterday? You know what I mean? And we go through seasonals, and we do all kinds of things all the time. But in a YouTube live stream, yeah, I'm not going to do it all. Obviously going to give paid members more. So I don't mean to make it an ad, but my intention, Silly Sally, is this. I want you to use it. So I guess maybe I'm beating you too hard, which is fair. I think that's fair. But I do think everybody like needs to trade this. So that is my belief. Not to make it an ad, but I want you to say, right? Okay. Well, we have a prop fund. Why don't you join that? Look at that. You don't even have to take an exam, and you keep 100% of the money. And I give you a rebate so that TRADARS ends up being free. So how'd you like to have all this and it's free? Yeah, well, if you're a good trader, it's free for you. Look how simple this is, right, Silly Sally? If you're a half decent trader and you use TRADARS, then TRADARS is free, and you keep all the profits. Cool. Cool. You don't need a prop fund anymore. All right. So, anyways, let's go back to euro dollar. We looked at 5 different time frames for up, down, and sideways. I don't think there is a catch. There are people in this chat that don't pay for TRADARS because, well, they pay up front, and then at the end of the month, I give them money back. Oh, your spread is also reduced. I forgot to mention that, Sal. What's the catch? Well, I guess the catch is you're going to be addicted to traders.com, and you're going to be a member forever. And you're always going to use market sentiment, fundamentals, technicals, and you're going to love our performance coaching. And you get a rebate on your spread. And if you trade through us and you're a profitable trader, TRADARS is free. Yeah. Thank you for helping me make this a sales pitch for traders.com. But anyways, let's go back to this. 5 different times. I don't even know if you want to buy euro dollar or not. That's the biggest thing. That's why you got to start with fundamentals first. This might be the dumbest thing to look at. But nonetheless, many people love trading euro dollar. So that's why I put it in the free live stream. Cool. So if you looked at a 15-minute chart, a 30-minute, 60-minute, 4-hour, and daily, and you only look for up, down, and sideways trends, what do you see? On the daily, there's an uptrend, and it's under threat. Does it mean sell? Heck no. Don't sell up channels. You'd have to be a knucklehead. So there's only 2 things to do. Okay, somewhere in there, plan A and plan B, and that's it. The thing is, that takes me 10 seconds. Now, newer traders, it takes a long time to make that decision. So we just automate it. That's the easiest part of trading. We know actually taking the trade and managing the risk is much more alpha focused, meaning you have to make decisions. But if you're doing other things besides buying dips in an uptrend, then I think you're just kind of out there on your own. Right on, Sal. The thing with our prop fund, Sal, if you're interested, I don't give 2 hoots whether you scalp, spot, swing, carry position. It doesn't matter to me. I don't care. You either can trade profitably or if you can't. So if you trade profitably through us, TRADARS is free. Right on. Keep going. You get a bit of an equity boost. and you get a reduction in your spread. Well, a rebate of your spread. And some people feel like it's quite significant. Sweet. Good. Now you're a customer forever. Yeah. I know Al Brooks, but I've never met him. I think we're in a book and together somewhere. And I think I spoke at a conference where he was, but I don't know. Cool. All right. Let's keep going, y'all. Bitcoin. Did you hear about the 150, what was it, $150 million worth of Bitcoin SpaceX moved yesterday? Okay, what do you think about Bitcoin? Love it or hate it? Well, once again, we can look at all those charts and we can make decisions on what we think. But we could also try to automate the process and say, well, what are the patterns? I'm only looking for up, down, and sideways. I'm not interested in like reversal patterns and all that kind of stuff. Up, down, or sideways. Oh, right on, Sal. That's cool. I was thinking about doing a course on that one day. Maybe you can help. I got to, I got to do this for every day. It's my fault. Yeah, Ethereum too. Yeah, for sure. All right. So when we look at crypto here, in particular, because we do Ethereum, we have ADA, Cardano, and Ripple. But just looking at Bitcoin here, on an hourly chart, it shows weakness with a threat. So if you're a bull, you're a bit early. Okay, you're a bit early, but what you want to look for is this. So I don't know, have it go to 120 and then buy a dip, I guess. But then on a 4 hour, it's non-directional. So if you have to be fundamentally biased here. Okay. Okay. Now, Lewis says, hey, so crypto ETFs may be a very good investment vehicle, right? Well, you got to be careful. You're making giant leaps of faith. So you're like, hey, I want to be exposed to, let's say, a Bitcoin ETF because you believe in Bitcoin. Okay, well, your belief in Bitcoin is one thing. Then you have to look at the strategy that the ETF is running. And now so I actually read the prospectus and very often reread it 6 months later because very often I find they change their strategy. Okay, so you have to have a fundamental belief in the underlying asset, in this case, Bitcoin. Then you have to have, let's say, I was going to say technical, but I guess you have to have a belief in the actual trading strategy that the ETF is carrying out. And then you have to keep in contact with that strategy to ensure it hasn't changed. And then on the top of that, there might be 5 different ETF managers or management teams that are doing roughly the same thing. They have different costs. They have different experiences. And at the end of the day, they have different results because they make different decisions. Right? So, like, I advise Wheel ETF. Fantastic, in my humble opinion. I know the team very well. I know the management team very well. Talk to them probably once a week or more. And they're doing something similar but different. And that gives them an edge. But they could underperform. They just happen to be, in my opinion, outperforming their competitors. Cool. So why? Well, they're good traders and they have a unique strategy. But I also invest into other ETFs. And so they have different management teams. So like JP Morgan and Goldman Sachs and NEOS, for example, 3 different management teams or 3 different companies, and you might have different ETFs in each one of those teams. So you might have 2 Goldman Sachs funds, 2 JP Morgan funds, 2 NEOS funds, 2 Simplify funds, right? And then but then each one of those funds has a different team of human beings behind it. So at the end of the day, Lewis, I wouldn't make the leap of faith of like, oh, suddenly you're interested in Bitcoin. Should you buy a crypto ETF? Well, that's a giant leap because you're not buying Bitcoin. You're investing into a team of humans that are doing something with the underlying asset of Bitcoin. But there's many different things that can be done. And then the ability of the humans to actually carry out the strategy also is different. We call that alpha. One team might suck, one team might rock, and everyone else does what mediocrely. So on average, what happens? You get the beta. So your awesome team offsets your crappy team. So they're outliers. You might as well just throw them away. And in the middle is your mediocrity, which should be at least a sharp of 1. It's a good question. But Bitcoin, you have to be fundamentally bullish, and maybe you look at this as neutral with a breach of bearishness. So your assumption is higher, high, higher, low. So you want to be the high today and then buy another dip tomorrow? Yeah, well, that's your decision, my friend. Well, so Sal is commenting on my comment on the ETF and Bitcoin. Okay, they're going to be somewhat correlated because the underlying intrinsic asset is Bitcoin. Yeah. So you would assume down means down and up means up. But there's another level of if you compared 10 crypto ETFs, they're not all the same. And you're not necessarily actually getting Bitcoin. If your intent is to buy Bitcoin, you don't actually own Bitcoin, you own an ETF that owns Bitcoin. So I'm just saying it's still a leap of faith. It's not precisely, right, the same. So you have to do some analysis or just accept that you're likely to get the mediocrity in the middle, which is, you know what, at the end of the day, pretty fine to me. You don't want one to be up 50% and then that same one that used to be up 50% is down 50%. You don't want that because that throws off your chart. And should you look at Sharpe ratios? Yeah, I think so. Should you look at beta? Yeah, we do at the CIA. So if you guys are interested in this stuff, let me give you another sales pitch. I run a team called the Council of Investment Advisors. About 2 years ago, I gave them $50,000 of real money, my money, in a real account. And we've been managing it like an endowment. So I've been teaching the step-by-step process of managing money in an institutional fashion, and we're about to cross 100 grand. So right? So in another 2 years, it'll be 200 grand. Another 2 years, it'll be 400. Another 2 years, it'll be 800. Another 2 years, it'll be 1,600,000. So I'm teaching this, and we have actual real meetings, and we have very deep conversations. And do we discuss the beta? Yeah, of course we do. Oh my God. Okay. Luis says, so you need to be very familiar with crypto data. Well, you should know enough that you're making a decision and not a gamble. So for example, it wouldn't hurt if you looked at a chart and said, I don't know, because we've had tons of opportunities, right? So imagine you had Bitcoin drop, we'll call it from 122 down to 110. Okay. And maybe this is 100. Okay. And you made a decision. And for a technical reason, you like 110. You would not like a breach of 100. So you put a stop. That's so funny. What did I draw there? That was supposed to be 122. 12, 12. Okay, great. So do you have to understand how Bitcoin works? No. Should you understand why you want to own it? Yeah, I suppose. Maybe you just keep reading in places. Maybe all your friends and neighbors talk about Bitcoin going to $1 million. Okay, whatever. But at the very least, if you were going to buy an ETF, wouldn't that have been the opportunity? We're at 119 now. So could you at least time it? Yeah. And does it hurt to download and read? If there were, let's say, 5 Bitcoin ETFs, okay? If there were 5 of them, would it hurt to actually download their prospectus for each one of them and actually read them? Read about their strategy and read about the people that are actually deploying it? Because they're real people. They went to university. They have real experiences. You can link up with them on LinkedIn. Like, you're investing into people, I guess is what I'm trying to say, guys. Just as much as Bitcoin, you have to believe in the team carrying out the strategy. You're an allocator now. You're a boss. Act like a boss. Why should you hire one team out of 5? Which one's the best? Okay. And then when should you buy it? So which team is best and when is a good time? Well, these are boss decisions, not amateur retail traders. Well, this is what we do at TRADARS. And this is what we do very, very specifically. This is what we do at the Council of Investment Advisors. Because we try to align up not just technicals and rationale, but also fundamentals and seasonality. When's the right time to buy the S&P 500? There's more than just saying I want to own the S&P 500. Well, when is the probability of that good and when is the probability of that bad? Even if it doesn't happen, it probably would happen. It's like picking a cruise, a Caribbean cruise. Should you go in hurricane season? What's the probability of being hit by a hurricane? Well, I think you could probably do some research. Anyways, 10-year T-note. You ready? Price going up, 15-minute chart, opportunity. Daily, a threat to that opportunity, done. Looked at all the time frames. Gold. Okay, ready? All trends for gold, up, down, and sideways, 15-minute, 30-minute, 60-minute, 4-hour, daily. You ready? 3, 2, 1, done. There's only one pattern. Sorry, I have to do this for every view. Cool. That's it. So it's showing strength with a small opportunity. So you're supposed to buy it off the support, and it's supposed to work its way up, but I think you've missed a lot of it already. And is the opportunity amazing? No, not really. Otherwise, you'd see an uptrend on a 4-hour daily, right? Yeah. So you got a pissy little day trade. And, with our fundamental tools and stuff, you can find, is this a good time of day to trade gold? I think if you pulled it up, why don't we just do it? Just go. Just go. I'm talking about here. Okay,
US
so
Treasury Sec. Besant.
let's say you wanted to buy gold today. You were already a buyer of gold. That's the secret sauce, guys. You were already a buyer of gold yesterday, and you showed up today as a buyer. If you can't do that, then that's your problem. And this is what I'm trying to say. It's like the opportunity has already come and gone. Dude, this is your target for trend trading. This is your target for scalpers. You already know the best time of day to trade. You already know if you're a bull or a bear. And right on schedule. Right? You see this? Right on schedule. 3 hours ago, long and strong. So now this is probably the future of gold. And you should have been ready, willing, and able to buy a dip to the 4-hour implied. It's that kind of stuff. It's like all the data's here. You just have to take the time. Oh, well, if you're in that trade already, now it's risk management, right? So yeah, now you have the 4-hour implied low, the 1-hour implied low, the daily implied low. So now, and by the way, I guess I have to pull it up all over again. Thanks, Hakeem. Commerce Sec Lutnick. Another win for American manufacturers. Okay. Let me go back to that. Okay. The point of this is targets and stops. Okay. So analyzing every Tuesday going back a long time, specifically for gold, specifically this time of day, and of course it changes throughout the day. So these keep changing. Every orange line here, the daily, the 4-hour, and the 15-minute, change every 15 minutes. So it's talking about every 15 minutes, the next hour, 4-hour, and 24 hours. What typically happens? And what this chart is saying, it's non-directional. It doesn't know anything about direction. You need that. That's under the fundamentals tab. Having seen how gold performs, right, in analogous situations of time and day, the probability, if you're a bull, of price dropping below here in the next 24 hours is extremely unlikely. It just hasn't happened that way on average. That'd be very unusual. So your trade plan might be there. Now, when it comes to risk management, you're going to decide when should you move your stop. Well, if you get here, that could be interesting because here to here could be take profit. So you're a day trader now, right? And what you're doing is kind of you bought at 6 o'clock in the morning. Let's do it this way. You bought it at 6 o'clock in the morning and you intend to get out here. That would be a day trade. So 6 to 7, 7 to 8, 8 to 9, 9 to 9. Yeah. That's your target, right? London close. All right, cool. So that's your little market open day trade. Trading the New York open. Now, if you're going to stay in it longer, you want to use this as support, right? Okay. And of course, these things keep moving, but this is price action. So that'll stay static, where the orange lines are going to open and close. So they're going to close here because of the change in implied volatility. So you have a day trade that you're in for, just a few hours, right? So by 10 o'clock in the morning, you're pretty much done. So you're in for 4 hours, right? By the way, way before these tools came out, 10 years ago, 15 years ago, I was teaching gold trading strategy. Just so happened to be that's the best time to start trading. And what did I say? By 10 a.m., you'd have 2/3 of the average daily range. I can confirm it quantitatively now, but that's what I've been doing forever. Okay, time of day and there. But if you're going to hold it longer term, well, the 24 hours target is 34.53. That doesn't mean get out. It's just based on what usually happens, that if this remains bullish, then that would be normal. Not probable, but just normal. Yeah. So insanity is what I'm talking about. So you have to trade this way, guys. That's why, answering Silly Sally's question, I'm like, so why did this stream become a sales pitch kind of thing? Well, I apologize for that, but it does make logical sense. You need to trade this way. That's why. I am 100% convinced. So I don't want to make it salesy, but I want you to buy it. How about that? Not because I want to drive a Lambo or fly a private jet. No. No. I want you to trade this way. Simple enough. I think that's reasonable, isn't it? Let's talk about the S&P 500. Let's talk about SPX, baby. Let's talk about you and me. Oh, look at my. Okay, danger, danger, danger is what this chart says. Danger. Now let me double check. Maybe I didn't click S&P 500. I did. Uh-oh. But there's no trending pattern. So let's just see if there's anything on S&P 500. Or anything on anything. No. Is there a glitch in the matrix? A Microsoft? Microsoft got hacked. Really? There's nothing? That's interesting. Oh, right on, Hakeem. That's cool. There's a false rally in July, though, right? How many people know July often is a false rally for gold. Wow, look at that. So it says there's nothing going on there. There's our gold. 10-year T-note. I've added the reversal patterns and these types of patterns, so it's expanded a little bit, but not much. There's not much going on over here. Interesting. The markets are really. Oh, Richard didn't know that? All right. Would you, how many people here would like me to prove it? I don't know the future, but I know the past. Yeah, Dan's like, dude, every subscriber to TRADARS, everyone using our analytical platform knows this stuff. See, TRADARS isn't necessarily about, having Wayne coach you or Wayne is the guru. No, I'm your chief economist. I have a macroeconomics degree. So I read reports on your behalf. We have a team of performance coaching. Now, the coaches, how do they make a living? How do they pay their mortgage? How do they take care of their spouses and their children and all that kind of stuff? How do they put food on the table? Because they work for TRADARS? No. They're traders. They trade for a living. Yeah. And they're sharing. Yeah. Dude. Legit. So let's do something basic then about gold. I'll show you that it's in multiple places. And as Dan says, everybody knows this stuff. Of course, everybody knows this stuff. Okay. So we can go to gold. And I see, there it is. Oh, so we're neutral on gold right now. And check this out. We're significantly less bullish today than yesterday. Oh, retail bailed. Retail bailed on their positions yesterday. Oh, Naomi, that felt a little bit testy. Okay. I don't know if I misread. You've been a loyal viewer for a long time. That felt a little testy. Okay, but there's this July to August period, and we can zoom in a little bit here. We can go to this level. Okay, July to August. And by the way, like when we see gold, right? Green is 20 years, red is 5 years. So down, I have to do it in easier color to see. Down to down. That's what usually happens. Oh, look, it did. And then down to up is what usually happens. Oh, and that's what happened. And then down to down is what usually happens. Oh, and that's what happened. And then down to up. So there's our July, August period. And then a rollover from up to down. And then somewhere around here, down to up. So do I know if that's going to happen? No, but as Naomi says, you should know what's normal. In my humble opinion, you should know what's normal. And then your job is to do this. So probably going to look like this year. And then depending on sure risk on, risk off, and all that kind of stuff, what you do is you tilt this. Okay. So we're more than halfway through the year, right? So if I had, well, you have this data. So if you knew, let's put it this way, that this is the pattern that exists, how did it perform? Was it reasonably helpful to know the pattern is, okay, down basically the first 2 months, then up for 2 months, and then down for 3 months, then up for 2 months, and then down for basically a month, month and a half, and then up till the end of the year? Is this a total waste of time? Remember, we're talking about 20 years of data. 20 years of data. So now if you were bullish, I would tilt it like down to up to down to up, down to up. And now it's the same pattern, or at least I'm trying to draw it that way. And it's on a slightly different scale, so don't look at the month. But I'm like, it's the pattern you see tilted up. You can also do, on a bearish year, it would be the same thing, but it would be tilted bearishly. It would be, let's say, more down here, less up here, more down here, less up here, more down here, less up here. So it's down, but the ebb and flow has some normality to it. So it's almost like somebody buys it here and takes profit in January. And then it kind of looks like they buy it back somewhere in February, ride it up to around May and take profit. Then they let it fall till like, let's say late May, early June, and maybe they buy it back for the summer. And then somewhere around August, they bail. And then somewhere around October, they reinvest. And when are they going to take profit? January. It's almost like there's a normal pattern of buy, exit, buy, exit. Okay, there's a somewhere in here, we get to a lower low and then an up. So I would argue, I am arguing that there's 3 times a year to buy gold. Okay, here, here, and here. There's 3 seasons a year for gold. Now, is that only thing that matters for gold? No, it's only one thing inside of TRADARS. See, TRADARS will make a decision about gold. What about inflation? What about interest rate differentials? What about GDP? This is just demand increasing, demand increasing, demand increasing. So in my humble opinion, if you don't even know that, how are you supposed to be consistent? What if you're selling when it normally goes up? Is that even logical? Do you think you can consistently make money when an asset usually goes up, but you're a seller? Do you think you could be a consistent trader knowing when tops and bottoms are likely to form with the understanding that the fundamentals are driven by regular human behavior. This might have to do with demand for gold jewelry. This might have to be due to the supply of gold in the mining industry. Maybe supply, let's say, when it's raining in parts of the world where gold is produced, they produce a lot less gold. And then when it's dry, maybe they produce a lot more gold. Okay, well, it's good to know the seasonality of that, but which then creates a seasonality to the mining, which means they can only dig in the mine when it's dry. And therefore, after they dig for a few months, then they produce the gold, and then it suddenly hits the market. And the supply in the global market increases, which drops prices. Dude. I think it's good to know this. Okay? Yeah. I think it would be very, very good if every trade you made was based on logic and intelligence that you can prove quantitatively. Wayne, why is oil down? It's supposed to be down, bro. Even when it was going up, I said it should be coming down. Yeah. 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 You should know this. I knew this 20 years ago. Well, 18 years ago? 18 years ago, Kurt Worley studied 50 years of data from an actual database. Remember, our good friend and FX Bootcamp coach and quantitative analyst, Kurt Worley, was a data scientist. So I said, Kurt, can you access the data over at the EIA? And he's like, yeah, I can get that data. And I said, can you go back as far as you can and tell me the peak of oil? And he went through and he told me right here. Now, I didn't have it automated like we do now. So it took a week for one person with a master's degree in applied statistics and an engineering degree, a bachelor's degree in engineering. It took that one person 1 week to tell you what you have plotted on your chart. And if you don't know this, then you don't know oil. I mean, you just don't. Karnak says, hey, these things miss opportunities. These things. Let me speak to that. These are not trade plans. These are patterns. So you're supposed to be going through these things. Let's say you already know if you want to buy gold or not. Can you buy gold this time of year? Yes. We know that. We know this is rally time, but it's a false rally, as I covered before. So could you be buying gold? Yeah, for sure. Are the markets bullish or bearish? Look at some of these, right? Are the charts bullish or bearish? Well, let's look for those patterns. Okay, look at this. There's an up pattern right here a week ago. This could be part of your analysis. That the down move that we've had in gold is turning up. XAU is breaking resistance, and it did so 14 hours ago. This was 7 days ago. This was 14 hours ago. This is a rising wedge. This is a rising wedge. This is a rising wedge. Okay, 3 different time frames. All 3 are bullish. Okay, and all of these are opportunity. Okay, none of them are trade plans, Karnak. So the next thing you want to do is say, okay, daily shows a reversal to the bearishness and a potential breach. Okay, so what it's doing is saying, hey, if you were paying attention to this, okay, this move here seems to be breaking higher. Okay, cool. And even if it makes a lower low, you're still bullish. Okay? Based on the rules of a Gartley pattern. All it knows is some of those rules are fulfilling. So it's saying, even if it makes a lower low, it's not going to go lower than X. It's not going to go lower than that. So even if it goes, the next move is up. So you have all of this to say, well, daily is a lot less bearish than it was before. And you're already a bull, right, Karnak? So you're like, okay, do you have permission to engage? Yeah, sure. Sure. So now it's like, well, so what's going on in the 15-minute, 30-minute, and 60-minute? Oh, they're all bullish. So should you be dropping into your charts, looking for opportunities to buy a dip in gold? Yeah. Yeah. And we also know, as I showed you, you should have had this planned 3 or 4 hours ago. So the other thing we know quantitatively is if you're just showing up now after this spike, see, it already spiked, then you are not trading gold properly. Okay, do you understand? You should already be in these trades if you're a bull. This is just confirming it. So now on multiple time frames, you see the pattern and you're like, ooh, there's a lot of room to breathe. But I'm not sure. Once we get to this 4320, we might run into some problems based on the 30-minute chart. But based on the hourly chart, nah, we can get to 3455. Right? So yeah, 34.5 today. Maybe further up based on the long term. So all this is doing is prepping you. Okay, prepping you. And you're like, oh my God, right? So 3 hours ago, you could have done this type of work. And we go to gold, and you'll find out I've already planned this out. Yeah. Already planned it out. So what's the problem? Okay, now you're using technical analysis. Okay, you have the buy zones. So we've had 3 buy zones in a, right? Hakeem's been in long since here, huh? You mean, look at that. Huh? We covered this on Thursday in the swing trading group. So once again, if you're just logging into a guru live stream on YouTube and all you want to know is, Wayne, just tell me this candle. Well, how the heck am I supposed to know that? But I'll tell you what we do know. Up is up, down is down, up is up, and we have seasonal permission to engage. We also believe it's a false rally, and 8 weeks from now, we're not likely to be right in an uptrend. But where we are now, Dude, what day is it today? Tuesday? Dude, we did this Thursday. So that's what I'm trying to say. Okay, Karnak? So if you're just like, don't use TRADARS like this. Look, if you want to look at this and just say buy, yeah, I would say don't sign up. Forget it. Go find an alert service. But it's fool's gold. Okay? I'm sure you'll find somebody for $50 that will promise you to make you rich, and that person's share of your riches will be $50 a month. I'm sure you'll find there's tons of them, but it doesn't make any logical sense. It's like the dumbest thing ever. I'll make you rich for $50. How about I'll teach you how to trade, and I'll give you all the resources you need to make intelligent, informed decisions? Which one's the amateur? Which one's the pro? Okay? So this is a fact. This is happening. So if you were a bull on gold, I think you'd be hot to go HOTTOGO. But once again, since you're informed, you knew 3 hours ago to be at your charts ready, willing, and able. Well, what were you doing 3 hours ago? Okay? Well, let's talk about this. Well, now I think we're in the 4th hour, but 3 hours ago. Okay? Were you here? No. Were you here? No. Were you here? No. So here's the thing. You already know quantitatively. You can do this all day, every day. This is the time to be at your chart ready to trade gold. Are you a bull or a bear? You're a bull. Did you buy it on the hourly? Maybe. You were hoping to catch this, though, right? Yeah, I understand you. If I was a bull, I'd say, all right, so plan A is the moving average. Plan B, okay, is here. And plan C is actually quite a bit lower. So A, B, and C. All right, easy, right? Yeah, actually. Yeah. Buy it off the pivot point, buy it off the moving average. Like, dude, what's the problem? Well, Wayne, I didn't know to buy it. Well, we can solve that problem. Wayne, I didn't know it was going up. Well, nobody knows it's going up. You have to get past that. But you have to know if you're a bull or a bear. Well, Wayne, I'm a bull. Well, this is the best time of day right there to trade gold. So when did you pull the trigger? Well, Wayne, I got to the market now. The stock market's open and I'm interested in gold. Dude, what are you talking about? Okay? So you need to know what to do, why to do it, and when to do it. And if you have all of that data and the courage and strength to pull the trigger, knowing how to actually trade, you might have a chance of survival at this. But if you don't have this kind of data and you don't have the discipline to carry it out, you're not going to be competitive. Oh, you want to play in the NBA, but you don't like to practice. Oh, you want to play in the NBA, but you don't like to dribble with your left hand. Well, why don't you practice? So, Silly Sally, is it a sales pitch? Dude, I am singing from the mountaintop. I am trying to change fundamentally the way you make decisions, and quite literally fundamentally. But also, you need to know technicals. You need to know pattern recognition. You need to know market sentiment. You need to know seasonality. You need to know macroeconomics. You need to understand monetary policy. And if you're like, no, Wayne, I'm just a scalper. Hey, scalpers are awesome. But if you want to turn pro, I don't want you to say, well, Wayne, I want to play in the NBA, but I only dribble with my right hand. Well, you're not going to make it. I don't believe in the left hand, Wayne. Fake news. You're not going to make it. You see? So I'm trying to make an appeal both intellectually and emotionally to you. This is what you need to be doing. It's not me. I want you to have my Harvard degree in macroeconomics. Okay? Cost me a couple $100,000, cost you a couple hundred a month. But that's also access to all the database. You know, we're actually plugging into the CME group. I'm going to make a spoiler alert. We're plugging into the CME group right now to get the Fed Watch tool inside of TRADARS. So you have that data. Should you know how institutional bank-to-bank investors are pricing in the probability of Fed cuts? Would you like that, just to have that data at your fingertips all day, every day? Of course you need that data. Is it helpful to know there's a fake rally going on in gold right now? That you can make money for a while, but don't expect it to last for you might get 4 weeks out of it, but the following 4 weeks, you might give it all back. Is that good to know? I don't know. You tell me. Yeah. Is it good to know the COT data and have access to capital stock and capital flows? Well, I don't know. You tell me. Do you want to know institutional positioning and retail positioning? What everyone else is doing? Do you want to know how the market feels about gold? About hundreds of articles being written about gold on dozens of websites? Does it matter to you? Should it matter to you? Let's see. In the last week, there are 78 articles written on about gold on 5 different websites that we track, and they're neutral. Now, if you are correct with your gold long trades, guess what? The media will start to pick it up because they're slow as molasses on a cold Georgia morning. So what if suddenly this starts turning positive and you're already long because you understand seasonality as well as technical analysis? Then holy schnicker, then the idiot retail traders are going to start buying and you already own it. And they're going to push you up to the next level. Oh, should you know that? I don't know. You tell me. Oh, one thing I want to cover later today. Let's go over. Today is a Tuesday, right? Tuesday, David Pegler. Right now. Oh, it might even be over. Sorry, David. I didn't know you were doing 9:15. Guess that happened before, huh? Anyways, so you already missed it. Price action with David Pegler over at traders.com. And then later today, I will be doing our day trading group, otherwise known as the technical trading team, at 4. Tomorrow at 7 a.m., I'm doing fundies. Then I'm doing YouTube. Okay, let's go farther out. Then after YouTube, Peter is going to cover trading the stock market. And by the way, like, I've known David nearly 20 years. I've known Peter for about 15 years. Okay. David trades for a living. Peter trades for a living. It's great, right? Yeah. So he's going to cover trading stock indices. His specialty is S&P 500 minis, right? Yeah, that's what he does all day, every day. Cool. Then Thursday, I got my fundamentals, and then I got my YouTube. And then swing trading, David's going to take over because I will be doing charitable work in Chicago. So I'll do these meetings, and then I'll jump in the G400, take the Gulf Stream out to Chicago, and David's going to take over swing trading Thursday night. And then I'll have to cancel because I'll actually be in the board meeting, this one. So I'll cancel this one. But don't forget that Brian at 11 will be doing cryptocurrency. Then Maida at 5:30 will be doing the COT report. And by the way, she's got a great report system now that's even better than before. Oh my God, you got to see what she's up to, right? And then Sunday, I might be back in time. Sunday, 7. Will I be back in time? I don't know. If I'm back in time, we'll do it. If not, that'll have to be canceled. So, dude, this is just ongoing, relentless team support.
Australian dollar US dollar holds key support after RBA minutes, watching for channel reentry on dollar weakness.
US dollar yen dips as attention shifts to US Japan trade talks. Gold breaks resistance as US dollar weakness and trade uncertainty drive gains. US dollar yen stretches to the 38% retracement target.
FOMO or justified growth.
Commerce Sec Lutnick. Another win for American manufacturing.
U.S. Treasury Sec. Besant. Nothing tells me Powell should step down right now. Pi Network Price Forecast. PI at a crucial crossroads as BitGet and MEXC exchanges offload.
Gold U.S. dollar price forecast. Will gold gain acceptance above the $3,400 Oz handle?
Euro U.S. dollar price. Forecast, U.S. political and fiscal tensions keep the U.S. dollar pressured.